A very good morning to all my dear students. On behalf of ICAI, I welcome you today for CA Foundation Companies Act lecture. Good morning, Akshit, Yash, Vidan, all those who have joined with us, Anil, and let me see the students who are with us on the portal as well. Good morning, Divyanshi, Vishwas, all of you children, a very good morning. And I hope you all are ready for today's session. We are going to start a new chapter. I hope you have revised Indian Partnership Act. I think the chat is closed. That's why you couldn't write it back. So it's okay. No worries. So you will be given a chance to raise your hands and ask your queries in between the session. But today we are going to start with Companies Act 2013. So earlier we had Companies Act 1956. It was amended somewhere in between again. But now the latest act which has been amended, it was amended in 2013. Since then, we have been following Companies Act 2013, also the rules given in 2014. Remember when we were talking about the Indian Partnership Act, that time also we gave reference to the Companies Rule 2014, where it has restricted the number of members to 50. So this is your basic introduction about the act that we are going to start, and I hope you have revised your previous sessions also. And today we are going to understand, and we'll be dividing it into different lectures. In the first lecture, we are going to do the Companies Act 2013, that is the features, corporate wealth theory. In the next class, we'll be understanding about the classes of companies and share capital, and then we will be further understanding what is memorandum and articles of association. So as we begin our today's journey, I just wanted to tell you that being consistent with the hard work is the key to success. As we are just approaching our exams, you are preparing well. Please remember that hard work never goes waste. Whenever you feel a little demotivated, that syllabus is too long, we might not be able to remember it, you have to use different memorizing techniques, just remember these two words which are written over here in front of you, that I can do it and I will do it. Children, trust me, these words are the magical words, because like we say that it is important to stay hydrated during summer so that you don't feel low. Similar way, it is important to stay motivated when you're doing your CA course. So that motivation has to come from within. Teachers might, all of us might come and talk to you. We might tell you that it is very important to be consistent and everything. But that thing that comes from your mind within, that yes, I can do it. I manifested that I'm going to be a chartered accountant soon. Then definitely you'll achieve your dreams. So the moment you feel low, just write it on the back of your law book that yes, I can do it and I will do it, and open that page and immediately remind yourself. Once we send positive signals to our mind, our brain starts functioning in the same way and we start feeling relaxed, and it tells us that nothing is impossible in life. So the roadway towards success is very much clear, only it requires your determination and hard work. Once you have put your mind to something, you can achieve. So this is your timetable, the way you have to follow it. Hard work is definitely there. I always tell my students that it is in your blood. That's why you're doing a CA course. You cannot do a CA course if you're not a hardworking child. You have to have a proper study plan. When I say study plan, it does not mean that I'm being partial only for law. For accounts, economics, maths, stats, everything you need to make a proper study plan. Without study plan, children, the things, when you don't have a timetable, how do you used to study in school days? You know that after first period, second period, teacher is going to come, and then third period, teacher will be coming, because we have a fixed timetable in a school. So this timetable you have to make for yourself so that all the subjects are given equal weightage as well as importance. Notes are very important. I keep telling you, whenever you sit for my class, sit with your pens and papers in hand so that whatever ma'am is telling you extra thing, you should be noting it down. Now, what I mean by consistency means, when you work in a job also, resilience is very important. You have to be constant with whatever you're doing. अगर मैंने इंडियन पार्टनरशिप एक्ट पढ़ लिया है, आई हैव लर्नड इट, नाउ आफ्टर फ्यू वीक्स आई हैव टू रिवाइज इट, because human body, it is very natural, the human brain, that we tend to forget the things because we're studying so many things. In between, BCom also pops up, so we are giving exams for BCom also, so everything has to be managed. So a quick revision and recap is very important, children. That is one thing where I have seen CA foundation students tend to imagine that yes, I have understood, it is very simple, but I have not done my writing practice, I have not revised, then I fail to get marks in my exam. बिकॉज मुझे तो पता ही नहीं है लिखना कैसे है, और वहां पर फिर हमें मुश्किल आती है लिखने में. So writing is very important. Case study based questions, keep writing them, keep practicing. And that happens when you open up your MTPs and RTPs. Children Institute has made so much effort, so beautifully. All that ready reckoner is over there for all of you to refer to it. I'll show you where the provisions are very nicely summarized on the website for all of you on the Board of Studies. They have made all these MTPs and RTPs according to the current format of the paper. So you must go through those kind of RTPs and MTPs, try doing a writing practice, and that helps you as a memory game. There you can see how much you have retained in your mind and how much you can write it back when you see the questions. All right. So these are few tips which I love to share with my CA Foundation students, because I believe if you are studying law from me, each one should get exemption and you should clear your CA Foundation with very good marks. And law mein to exemption is must, and you can easily get it if you have really prepared well. Thank you so much, Mr. Abdul Sheikh Bhai Wala. I'm so glad to receive such a beautiful morning message. I'm glad you enjoy my classes. Miss Mansavi, Divyansh, Vishwas, all of you, good morning, children. And all those who are here with us on the Zoom also, good morning. And I wish that you understand the lecture nicely, and let's try to make it as interactive as possible. So let's start the session by understanding the definition of the word company. What do we understand by the word company? First of all, Companies Act 2013 was preceded by Companies Act 1956. So if ever in your BCom or any other books you are referring, always make sure that you refer to the Companies Act 2013. 1956 is not part of a syllabus. We don't follow the old act. It has been entirely replaced. So always remember that consolidated and amended law is Companies Act 2013. In order to facilitate the expansion and growth of the economy. So government thought that we need to replace it with the new legislation because too many things were introduced, too many things were amended. So the entire act was replaced. So now the current act has 470 sections. So don't worry, you don't have all these sections in your foundation. You just have 2-3 tiny sections in your foundation. You must have seen it's a very small chapter, Companies Act, but it's very, very important. Because children, from here, Companies Act 2013 introduction, you will be moving towards your CA inter syllabus. So you'll be doing just the basis of foundation, those 10-12 pages of the study which are given over there, and then you move towards your inter. So these 470 are also not covered in inter. There is partly which is covered in inter and part of it is covered in CA final. Then the Act has 7 schedules, 29 chapters. So roughly around 12 chapters of Companies Act are covered in your CA inter. And substantial part of the Act is in the form of companies rules. So whenever you'll be studying the Act, there will be reference of the companies rules also. You'll be seeing number of forms, rules when you go to CA inter. But abhi ke liye, we have a very limited syllabus. So this is just the laydown of what you have in your syllabus entirely. Now, what is a company? So according to Chief Justice Marshall, a corporation, company means a corporation, a corporate kind of structure they have. So it is invisible, artificial, intangible, existing only in the contemplation of law. Please write down the meaning of contemplation means existing only in the eyes of law. कानून की नजरों में कंपनी एग्जिस्ट करती है. एक्चुअली में कोई फिजिकल ह्यूमन बॉडी नहीं है कंपनी, बट यस इट डज एग्जिस्ट एज एन इंडिविजुअल इन द आईज ऑफ लॉ. Sir, can I get the annotations for writing technical support? Is it possible that if I can get the annotations for the pen, if I can get for writing on the slides? Somewhere at the technical support, if you can tell me. All right. I think they don't have it. Anyways, so in the words of Professor Hane, what has been the definition given by Professor Hane that a company is an incorporated association, which is an artificial person created by law having a separate entity with a perpetual succession and common seal. Now, all these words actually summarize the features of the Companies Act. You can use the admin query pad, children, if you want to write down your doubts or you want to ask anything, you can write it down on the admin query pad also. So in the words of Professor Hane has given a very clarified definition that the company is an incorporated association and it is an artificial person. So I told you that when company is incorporated, an individual comes into existence, but that is an artificial individual, not a real individual. So it is an artificial person which is created just by law, and it has a common seal. Common seal means that how we put the signatures of the company, that is through a common seal, and having a separate legal entity. So all these are the features of the companies. Each and every word will be explained to you in detail once we start with the characteristics of the company. So there is section 2, subsection 20 of the Companies Act that defines what is a company. It says it means any company incorporated under this act or under the company law. So what is the meaning of company? कोई भी company जो 2013 में बनी है या फिर under any other previous company law means 1956 में, 1968 में, 1972 में किसी भी act में जो company बनी है उसको company मान लिया जाता है. Something which is incorporated in India under this act is a company. How the company is incorporated, your second lecture with me will include how it is incorporated, what are the steps required for incorporating. Now, this is a 3 marks question, applicability of the Companies Act. How the Companies Act is applicable, to whom, to which all companies Companies Act is applicable. So it says the companies, number 1, it is applicable to all the companies incorporated under this act. So this is your definition of company. So whatever companies have been incorporated under this act or under any previous company law, this act is applicable to them. Is it applicable to insurance companies? Yes, ma'am. Companies Act is applicable to insurance companies also. It is applicable to banking companies also. It is applicable to electricity companies also, and any other company governed by any special act, like your ICAI Act, a statutory body. So there also, Companies Act is applicable to these kind of special act bodies also. Now, insurance companies, Companies Act is applicable to insurance companies except where the provisions are inconsistent with the provisions of Insurance Act. Now, where say insurance companies are made, they have to comply with the Insurance Act 1938 or IRDA. Banking companies have to comply with the RBI regulations as well as Banking Regulations Act. Electricity company has to comply with the Electricity Act. But their formation, their structure, number of members, private or public company, all this applicability of Companies Act has to be made applied to insurance companies. So say, for example, if you're setting up an insurance company, ABC Assurance Limited, so it is a public company. What are the implications of the public company? We have to refer to the Companies Act. What are the borrowing powers, limits of the directors, whatever is written in the Companies Act, because it is a company that you're forming, insurance company, banking company. So whatever is written in the act, that will become applicable to the insurance companies and banking companies and electricity companies. But what is the meaning of this line which is written in the bracket, except where the provisions are inconsistent? Now, say, for example, Insurance Act gives you a separate kind of borrowing limit. Say it allows you that you can borrow up to rupees 10 lakh. But for example, it is written in Companies Act that you can borrow up till 15 lakhs. Now, where the provisions are inconsistent means both the acts are saying something different. So then if you're an insurance company, you have to follow your Insurance Act. Wherever the provisions of the said act are inconsistent means where Companies Act, you're following Companies Act for insurance company, but somewhere if Companies Act and Insurance Act is saying something else, then you go with the Insurance Act. If you're a banking company, you're following Companies Act as well as Banking Regulations Act, but if there is any inconsistency, you follow your Banking Regulation Act. So where 2 different opinions are being given by the act, then you will follow the provisions of the act under which you are incorporated. But all the compliance, how the company is formed, what are the steps for incorporation, what are the requirements of MOA, AOA, everything, Companies Act will be applicable. The Companies Act 2013 will define how the companies have to be incorporated and what will be the provisions of the MOA and other things. Is that clear, children? So this is your applicability of the Companies Act. Now let's start with the salient features of the Companies Act. What are the features? What are the characteristics of a company? So the number one characteristic is it's a body corporate. If you can see this big buildings, Tata, Reliance, all these companies, Microsoft, Google, all these big companies, they get a body corporate structure. Means although there is a building which has come up by the name of a company, but it is invisible, it is intangible. You can't see a company. Company exists only in the eyes of law. Say, for example, if you form a company, ABC Limited, so ABC Limited exists on the papers. You can't see, it's a body corporate. So means it's a body corporate means it is a company incorporated in India, and body corporate also includes a company incorporated outside India. So if you have formed a company in Dubai and it is having a place of business in India, that is also a body corporate. So body corporate is a large word which means company incorporated in India as well as outside India. Just 1 second, children. I need to check my internet connection. Just give me 1 minute. I hope I'm audible now, children. So yes, we were discussing about the body corporate. So body corporate means a company which is incorporated inside India as well as the companies incorporated outside India. So body corporate is a larger word which is used for a company. कोई भी company है, चाहे India में बनी है, चाहे बाहर बनी है, it is known as the body corporate. Now, second feature is perpetual succession. Perpetual succession means continuity in its existence. Miss Kavita is asking common seal is not mandatory. Okay, we will come on the point of common seal, Kavita, then I will explain. Vishwas is asking LLP. So this is not LLP, child. We are discussing companies. So I will explain you how the company is different from LLP. You must have done LLP recently, but here we are talking about the Companies Act. Okay, so perpetual succession means continuity of the company. Company has a perpetual succession. Company never dies. Company continues to exist. Can you see how beautifully the picture is showing the Tata's building and all the lights are on? Now, even if all the directors of Tata company are no more there, still the company continues to exist. This is what we are trying to depict with the picture. What does it actually mean, ma'am? The name of the company has to be striped off from the registrar of companies. Winding up has to be done if you want to close a company. Company has nothing to do with its existence of its members or directors. Company gets its own legal existence. Once the company has been incorporated, what happens is, suppose there are 3 members, A, B, and C, they thought of starting up a company. So if there are just 3 members, then you can start with a private limited company because minimum 2 people are required in private limited company. And how many people are required for setting up a public limited company? Tell me. Answer all of you have to answer me in the admin query part. If the chat box is not working, you can answer me over here. How many minimum number of members are required for starting a public limited company? So for private company, we need 2. Excellent. All of you have given the correct answers. 7 members are required for starting the public company. So if we are having just the 3 members, A, B, and C, so they have started a private company. Now they will go to the registrar of company. Section 7 will be followed. How the company is incorporated, all that process will be taken up. And now once you get a certificate of incorporation, that means ABC Private Limited has now come into existence. Tomorrow, ABC, 3 of them died. Will the company come to an end? Yes, ma'am, or no, ma'am? If all the members have died, will the company come to an end? Madhumita, Vanisha, Vishwas, Kavita, all of you are answering good. Everyone should answer me back. So will the company come to an end? No, ma'am. The company continues to exist. Very good. The company continues to exist. So how does the company comes to an end? There is a procedure for the winding up or closing of the company. That is how the company comes to an end. Now coming to the third very important feature, that is separate legal entity. So the company is separate and the members who have formed the company are separate. Company, 3 members, ABC, they are the shareholders, and the company they have formed is separate from each other. Now, where was this laid down? It was laid down in the case of Makora versus Northern Assurance Company Limited. It was clearly written in this case law that a member of or the shareholder of the company cannot have an insurable interest in the company's property. That means if you are a shareholder or the owner of the company, then also if the property of the company belongs to company and your individual property is your property. So that is the meaning of the concept of separate legal entity. Let me make you understand this case law from your study material also. So we'll just open the study material and where this case law is written, Makora versus Northern Assurance Company Limited. So these are the points that we are doing. Applicability we have done, meaning we have done, Justice Marshall definition also you can learn, but Professor Haney definition is more simpler because it includes all the features of the companies. So we should learn that only. And now separate legal entity means company has a separate legal personality. Once it is registered, it becomes a legal personality. Something comes into existence. Like I told you, ABC Limited has come into existence. So ABC Limited is separate and distinct from Mr. A, Mr. B, and Mr. C. Means company can own property. There can be the properties in the name of ABC Limited. Like Tata Motors, it can have the property in the name of Tata Motors company. Tata Motors can have their own bank accounts. They can raise the loans with the name of the company. So company is different from the subscribers to the memorandum, means people who have made it. So I told you A, B, and C went to the registrar to incorporate the company. So they are different and company is different from its members. Even the members cannot have an insurable interest in the property of the company. Now, this is the case law that we're going to understand. So first of all, let's understand the meaning of insurable interest. You purchase this mobile phone. Let's assume it's a very expensive mobile phone, although it's a very ordinary mobile phone. It's just OnePlus, but let's assume that it's a very expensive mobile phone and now you want to get its insurance done. So that tomorrow if we break this phone, we can claim it from the insurance company. This is what is the meaning of insurance, right? So say for example, you're a sole proprietor and you have different n number of mobile phones in your shop. So now you're a sole proprietor, Mr. MK. And the name of your sole proprietorship is MK Traders. So now you want to get the insurance of these mobile phones in your shop. You can get it in the name of MK Traders or Mr. MK. It is one and the same thing. Why? Because the sole proprietor and the owner, they are one and the same thing. They're not different. But if you are an MK Limited, MK Private Limited, and you are Mr. MK, then Mr. MK and the MK Private Limited company that you have made, it's separate from its members. Then you have to take the insurance in the name of MK Private Limited. Because company is different from its members. You cannot even have the insurable interest. Means now the property, this mobile phones belong to the property is the of the property of the MK Private Limited, that is of the company. So if you take the insurance, that means insurance is in your name. The papers of the insurance, they are written in your name. Then you cannot claim the insurance from the insurance company because the company's property is different from the member's property. So it says member does not even have insurable interest, means you can't take insurance of the company's property in your own name. If I want to get all these mobile phones insured, I have to take the insurance in the name of MK Private Limited. But if I'm a sole proprietor, then I can take in my name. So because they are not different, they are one. In sole proprietorship, the member and the owner and the shop is one. But in company, the members are different and the company is different. So let's read the case law. Makara was the holder of nearly all except one shares of a timber company. So Makara was a person, he was the owner, 99 shares he was holding, one of the share was being held by somebody else. So he was the largest shareholder, he was the owner of the timber company. And he was also a major creditor of the company. So he has also given certain money to the company which needs to be paid to back him. He insured the company's timber in his own name. Now he took the insurance from the insurance company that this is my logs of wood, this is my timber which I'm going to use for preparing furniture or I'm going to sell it in the market, whatever he's going to do it. A lot of timber is lying, so he took the insurance in the name of him, in his own name. So whose timber was it? It was company's timber because it is you formed a company. Now whatever business you're doing in the name of the company, the property is of the company. It is not your private property. Now that timber got lost in fire. M wanted to claim the money from the insurance company. Insurance company said that we are not liable to him because shareholder cannot have any right in the property owned by the company. That is company's property. Mr. Makora, you should have taken the insurance in the name of your Makora Timber Company Limited. Why did you take insurance in your name? So what actually happened was, children, Makora was a sole proprietor. So when he was a sole proprietor, then I told you Makora and the timber are same. My business, I am the owner, we are one and the same person, and Makora took the insurance in his own name. Later on, he formed the company. Entire timber was converted into the company's property. But he forgot to get the insurance changed in the name of company. So he went crying to the insurance company that my timber has got lost. Please give me insurance compensation. So company said the insurance is in the name of Mr. Makora. Mr. Makora, you have personally, your assets have been lost, so we can give you insurance. He said, yes, my company's assets have lost. So he said the word my company's assets. So the company's assets, but the insurance is not in the name of company. How can we give you money? So that is a very, very important case law. Makora lost money. He lost his timber also, and he could not get the claim from the insurance company because the insurance papers were not in the name of the company. Company's property, then it should be insured in the name of company. You cannot have insurable interest in the property of the company. Company's property is different, your property is different. You're getting insurance for your property, you can get it in your own. You want to get the insurance for the company, you have to get it in the name of the company. Everyone is clear on this case law, Makora versus Northern Insurance Company Limited. Sabko samajh aa gaya? Any doubt in this? Mr. Devansh Bhatti is asking, ma'am, clothed with legal personality. Mr. Ankit, you can write down your query over here. The chat is closed, I suppose. So you can write down your query over here in the query pad. Yes, Madhumita, absolutely correct. Kavita, Gunjal, Pavan Kumar, all your answers are correct, children. Yes, Divyansh is asking, clothed with a legal personality means the clothes that the company is wearing is of the legal personality, means it is existing in the eyes of law. Means a company has come into existence. That does not mean that some robot or individual has come into existence, but it is just a legal personality. So clothed with legal personality means that a company is a person who is a legal person who is existing only in the eyes of law. It is intangible, invisible, cannot be seen, cannot be touched. It is something which is only in the papers, legal papers. Okay, excellent. Pavan Kumar says, no doubts. Mr. Ankit, you have a doubt. You can write it down in the query pad over here and I will reply to it. And if you want to speak, Mr. Ankit, you can raise your hand. I will allow you to speak. All right. Everyone is clear about Makora case though. Again, the same point, artificial legal person. So company has come into existence. Can you see how beautifully the books of the paper yes, you can sue company and company can also be sued, means you can also file a case against the company. Enter into contracts. ABC Private Limited can also enter into contracts on behalf of your shareholders. Company can enter into contracts. And a very important line, it acts through human agency. Now, company does not have arms and legs. It cannot go and walk and enter into contracts. There is some human agency behind the company who is doing all the management and functioning of the company. So who is this human agency? The directors, managers, and shareholders of the company who are acting on behalf of company. Although company has come into existence, but the human agency is always somebody is there who is running the company. There will be the shareholders and directors. But the only difference between fourth and second point is that even if all the shareholders of the company die, company still continues to exist because it has a perpetual succession, means company never dies, and it is also acting through a human agency. Both the points are very, very important. Clear? And the fifth point is that the company has a common seal. Can you see how we are putting the common seal? The kind of a stamp that you used to play when you were kids. So now this is a company seal, company stamp that you're going to use. Once the company has been incorporated, you get this kind of stamp of ABC Private Limited. Wherever you are signing, you can put the signatures of the company through this common seal. We will take up in detail this point of common seal from module also. And the sixth point is limited liability. Can you see how both the people are joining hands? They're so happy. First, we formed the sole proprietor. What was the liability in sole proprietor? Unlimited liability. I had to bear all the burden on my shoulders because I'm a sole proprietor. Then I thought of starting the partnership. Now we are 2, 3, 4 partners, but still we have the disadvantage of unlimited liability. So we thought of forming a company, but recently something has come in between partnership and company, that is limited liability partnership, which is the most famous form of organization which people are coming up. Nowadays, many chartered accountants are also starting up with LLPs because it helps you, gives you the benefit of corporate existence also, and your liability gets limited. But still the hunger and greed for expansion is more, then you can start up a company. You do minimum 2 people, you started with a private limited company and your liability is limited. You want to start up a big company, minimum 7 members, you can start a public limited company and your liability is limited. You still want to get more expansion, you come up with an IPO, you get your shares listed. So you go to CA Enter, you study how these kind of things happen. But as of now, we are just covering the small point of company, that is limited liability. So your liability is either limited by shares or by guarantee. So if you have taken up shares in the company, whatever is the amount which is unpaid on the shares, that will be your liability. Means you cannot be asked to pay more than the amount which is unpaid on these shares. Say for example, if you have taken 5,000 shares in a company and the value is rupees 10 per share, so 50,000, but you have just paid rupees 8 per share. That means you have paid 40,000. Now, how much liability can be demanded from you? The unpaid amount is rupees 2 per share. So 5,000 into 2 is 10,000. So whenever the company goes into winding up or whenever there is a need of money, your liability can only be up till the amount unpaid on the shares, that is rupees 10,000. Next is company limited by guarantee. What is the meaning of guarantee? You have done indemnity and guarantee. You tell me first of all, what is the meaning of guarantee? All of you have to reply me back. What is the meaning of the word guarantee? Yes, what is the meaning of the word guarantee, children? All of you write down on the, why don't you use this admin query pad? If the chat box is closed, use this. Nobody is stopping you from writing over here. Yes, guarantee means when one person has given the surety that, okay, fine, you give the loan to him or you give the payment to him, I am there standing at his back to give the payment. So this is a kind of a guarantee that you gave. In chapter of indemnity and guarantee, I've studied in detail what is the meaning of guarantee. Now, what is the meaning of company limited by guarantee? So guarantee means a fixed amount, a fixed contribution that you're telling. Okay. Something, a surety has been given. Very good, Pavan Kumar, Vishwas, Bhaskar. I am getting your answers good. So a company limited by guarantee. So there are three members, A, B, and C. A says, I am guaranteeing the amount of 10,000. B says, I'm giving the guarantee for 15,000. C says, I give the guarantee of 20,000. So tomorrow, if there is a liability of 1 lakh rupees, A can be called only to pay rupees 10,000 because it is a limited by guarantee. Whatever the stipulated amount of guarantee which has been given by the shareholders, that is the only amount that can be used in order to pay off their liabilities. B cannot be asked to pay more than 15,000 because he has given the guarantee for 15,000. Excellent answer, Mr. Abdul. Very good. And C can be called upon only to pay 20,000. So this is the meaning of limited liability means, and there can be a third category, which is unlimited liability companies. Now, what happens in unlimited liability? Not just your business assets are liable, but your personal property also becomes liable to pay off the liabilities of the company. So very less unlimited liability companies we have. So we have largely companies limited by shares or limited by guarantee, where you get yourself covered with the burden of unlimited liability is not there. Your liability becomes very much limited. Now let's go to the point of common seal from the module because it is a very important topic. 3 marks question can come related to common seal. Let's try to cover that. So perpetual succession, they have given you many companies are in existence for more than 100 years. There are companies in existence for more than 100 years. This is possible due to the fact that the company has perpetual succession. Company has 7 members, all of them died, but still the company continues to exist. What is the meaning of this line? Unlike partnership form of organization, there are 2 partners. Partners died, partnership also comes to an end. Why? Because partnership firm is the joint name given to all the partners taken together. Partnership may and sole proprietor may partners and the firm that they have formed are one. They're not separate. Partners died, firm also comes to an end. But company members died, company still continue to exist because company is separate from its members. So in case of company limited by shares, I told you limited liability, the debts do not become the debts of the shareholders. The liability of the company has to be paid from the company's assets. They are not personally liable for the liability of the company. They can be company limited by guarantee. There you pay just the amount guaranteed, and unlimited may the members' liability is also unlimited. Artificial person, you can have bank accounts, raise loans, companies an artificial person acting through human agency. All these points have been covered in my presentation. Now let's talk about common seal. So there was a major amendment in 2015 which says that common seal has been made optional. What is the meaning of optional? There is a company ABC Private Limited. They want to do their signatures. They don't have a common seal. Is there any problem? Is it compulsory to have a common seal? Yes, ma'am, or no, ma'am? Is it going to affect my functioning of the company if I'm not having a common seal? No, ma'am, it is not going to affect because it is not mandatory to have a common seal. Wonderful answers. All of you have given the correct answer. So the words a common seal has been omitted means now it has become optional to have a common seal. So if I don't have a common seal, then the authorization will be given by whom? Either by 2 directors. Now, who are going to sign it? 2 directors will sign it. So ABC Private Limited, they're having Mr. A and Mr. B as the director of the company. So both of them have to sign it. Mr. A and Mr. B both have signed, that is fine. Either you have a common seal. If you don't have a common seal, then 2 directors shall be signed. But if the company is having a company secretary, Mr. C, then either of the director, Mr. A or Mr. B, can sign and C should sign it, then also it suffices. So how the authorization has to be given? Say, for example, there are 2 directors. A is the director, B is the director, and C is the company secretary. So either A and B can sign, or A and C can sign, or B and C can sign. 1 director and 1 company secretary can also sign, or 2 directors can sign. It is absolutely correct. But at least 2 directors, or if 1 director is signing and 1 company secretary is signing, then also the common seal condition is fulfilled. So it says all the documents shall be authenticated. Authenticated means approve hone chahiye, sign hone chahiye. Common seal is required to be done only if the company opts to have a common seal. So in your notes, you will make, if company is opting for a common seal, then yes, common seal has to be there. If company has not opted for a common seal, then you have 2 situations. Either 2 directors can sign, or 1 director and 1 company secretary can sign. Clear? All right. Now, any doubts still here, children, because we are moving towards a very, very important and interesting topic. Good, Natasha, Kavita, Vanisha, Vishwas, Divyansh, Abdul, all of you have given the correct answers for this one. Any doubts still here, children? Corporate whale theory. Let's move to another important, interesting topic, that is corporate whale theory. What is the meaning of the word corporate whale? Corporate whale is a legal concept where the company is identified separately from its members. So it clearly tells you that the company is different, its members are different. Members are shielded from the liability of connected with the company's actions. Means it has been specifically made so that the liability of the company will pay, liability of shareholders will pay. They are different. They are separate from each other. They are shielded means they are protected from the liability connected with the company. Salomon versus Salomon and Company Limited laid down the foundation of the concept of corporate whale or independent corporate personality. So it says how this word of corporate insulation come into existence. How the corporate whale theory come into existence? It was in the leading case law, Supreme Court judgment, Salomon versus Salomon and Company Limited. This corporate whale theory was considered. Now, second important case law of the day we are going to understand. We have done one very important case law, that is Makora versus Northern Assurance. Now we are going to do the yes, Vishwas, they both are same depending upon what kind of seal that you're using for the company. Ms. Kavita has asked a very interesting question. Then why does Haney's definition is referred to as company's definition? So it says that a company's complete features of the definition is given, child. So even if you go and see over here, the features, a company being an artificial person is not bestowed with a body natural being. Therefore, it works through human agency. It says it does not have some natural individual. It is acting through human agency. So common seal is the official signature. Common seal is the official signature that we are using for fixing of the documents. It is used as a symbol of incorporation. So now why that word of common seal has been used? Because authorization still has to be given, child. Whether you give it through common seal, put the stamp, then also it's fine. Now, in 5th point, we are studying if you don't have a common seal, you have not opted for the common seal. Option is given to you. So in features, that's why common seal word is mandatory. Means sign to karna hi padega. Authentication has to be given. But if you're not having the seal, then what we can use? 2 directors are signing it, or 1 director and 1 company secretary can also sign it. Is that clear, children? I hope everyone is clear. Okay. All right. So I hope no more doubts. Yes, Aniket. Vishwas Bhaskar says clear. Kavita, I hope your doubt is clear. Natasha. All right. So let's move ahead to common corporate veil theory now. So corporate veil theory, I was explaining you a Salomon versus Salomon and Company Limited. This case law has laid down the foundation of corporate veil theory. First of all, what is the meaning of the word corporate veil? Liability of the company is different and shareholders are different from the company. It is given to give a protection to the shareholders because there is no unlimited liability concept. That's why the company's property, company's assets, liabilities belong to the company and shareholders are the members. They are different from there is an existence of separate legal existence. So Salomon versus Salomon, the House of Lords laid down that the company is different and distinct from its members. Now, what happened in this case law was Salomon was an individual who incorporated a company. He formed the company that is Salomon and Company Limited. So it is a limited means it's a public company that he has formed. And how many subscribers? It is a public company. The 7 members have to be there. And who were the 7 members? Himself, his wife, his 4 children and 1 daughter. So it was a family business only, but he has made a company by having these 7 members. And he who sold his business earlier, he was having the business with the name of Salomon. He sold his business to himself in the company and purchase consideration of 38,782 pounds were paid. Now, this is just an information that is given to you that this is the payment that was paid as purchase consideration for the sale of business. And how much shares he took? He took 20,000 shares in the company and debentures also by creating a charge on the company's assets. Now, this line is very, very important. So 20,000 shares he has taken, 10,000 debentures and balance 8,782 he has paid in cash. His wife, daughter and sons have also taken 1 share each. Now, this line is very important. 20,000 shares he has taken, share capital. He has subscribed Salomon and he has taken debentures worth 10,000 pounds. What is the meaning of debentures, children? You all are chartered accountant students. Vedant Gupta is saying, ma'am, we are not allowed to use chat. So it's okay, beta. You can write in the chat box. Some students try to create a lot of disturbance if we allow them the chat. That's why they have disabled it. So don't worry, okay? I'm taking the queries from the admin query pad only, so you can write it down over here. Don't worry. Okay. So what is the meaning of debentures? Yes, you have to answer me back. Yes. Debentures is a kind of a borrowing taken by the company. So it is a kind of a borrowing. So that means debentures worth rupees 10,000 he has taken. It is a borrowing. And then he gave a security or the charge on the company's assets. So whenever you're giving any kind of loan or borrowing, you try to give certain security so that tomorrow, if you don't repay the loan, your secured assets will be sold off in order to recover the money for the company. So basically, he has become the secured creditor of the company. He has taken debentures in the company. That means a loan has been given to the company and which is given against the security on the company's assets. So you can simply understand he was also a secured creditor of the company. Now, when the company went into liquidation means company is winding up due to general trade depression means the company is not doing well. There is a depression kind of situation in the market. Market is not doing well. So company failed and it is going into liquidation. Company did not have sufficient assets to pay off the liabilities. So let's assume the assets were just 6,000 pounds were the assets which were left. Now there are unsecured creditors of 7,000 pounds. Was there any secured creditor also? Yes, ma'am, you just explained us debentures worth 10,000 pounds have been taken by Salomon. So Salomon was the secured creditor of the company. He has given loan of 10,000 against the security. So when the company goes into liquidation, then how the payment is made? First, the assets are used for paying off the secured creditors. Balance, if any, is given to the unsecured creditors. Now, there were 6,000 pounds of the assets which were left. So, entire 6,000 were given to the secured creditor, that is Salomon himself. Unsecured creditors of 7,000 got very angry. They said, Salomon himself, he is the owner of the company. Why are you giving the money to him only? Salomon should not be treated as the secured creditor for the debentures he has held. He was the managing director. He was a one-man company. So law said, listen, children, company is different. Shareholders are different. Salomon has been given the money because he is a secured creditor of the company. All right. So he was allowed to take the money because he was secured creditor, not because he's the owner of the company. It is the duty of the company when it goes into liquidation. The assets will be paid first to the secured creditors, then we pay to the unsecured creditors. Since Salomon was the secured creditor of the company, that is why whatever assets were left were given to Salomon. So Lord MacNaughton held that we cannot say that the creditor said that it is mere sham and fraud, means the cloak of the company, means the existence of the company is just to create a fraud. Salomon himself is the owner. It is all the family members who are doing the business. Now he has taken home also all the money. This is very bad. So the angry unsecured creditors went to the court. So Supreme Court held that company is different from the subscribers. Though after incorporation, there may be same persons who are the managers receiving the profits, but they are not the agent of the subscribers. Company is not the agent, means there is no mutual agency relationship. Where was the mutual agency relationship? In partnership, we have studied about the mutual agency relationship, children. Okay. In partnership, we have studied about the Anil Mr. Naluri Anil, debentures means some specific amount given. Okay, fine. It is a kind of a borrowing. That's good. All of you have given the correct answer for that. So mutual agency is not there in the case of company. You cannot say that company is acting is a principal or agent. So you have taken up one share in Reliance. That does not mean that now Reliance is going to act as per your directions. So there is no agency relationship in case of company. Company is different. Shareholders are different. Company has its own existence. Shareholders cannot be held liable for the acts of the company, even if they hold the entire share capital. So whole of the corporation law is based on this separate legal entity concept. It says whole of the Companies Act is based on separate legal entity. Have you understood? All of you have understood till here. So anyone has a doubt, because after this we are going to a very depth knowledge of study that we'll be doing, but it is very important. So we'll take a small break here. Please read the definition carefully. Like Kavita raised a very interesting question from the definition also. So I hope you have understood now, Kavita, that point of common seal. Go through the definition, read the illustrations, read corporate whale theory in detail and all the features of the companies that we have discussed. And if you have any queries, you can write it down. You can also raise your hands. I hope raising hands is allowed to you. You can raise your hands. I will allow you to unmute and you can speak. Anyone has any query, they can raise their hands and they can ask. So no queries? Okay. So just revise it and then let's take a small break and then we'll move ahead. ahead. So we have seen all the points of corporate veil theory. We have understood. Yes, Aniket, the syllabus has changed. There is not much of differences, but you can refer to the same study material. If you want, we can refer to the same study that is applicable for your exams also. All right. Now let's move to the lifting of the corporate veil. Any doubts still here, children? Anyone wants to ask any questions? So Salomon versus Salomon and Company Limited has clearly justified that the company is different from its shareholders. Now we are going to understand the meaning of lifting of the corporate veils. Means somebody who is looking behind the company as a legal person. So when you're running a company, ABC Private Limited, who is actually running the company? Is the company in itself going and entering into the contracts? No, ma'am. There are directors, Mr. A and B. There is a shareholders of the company who are involved in the management of the company, who are functioning, who are responsible for the functioning of the company. So there are certain cases people started taking the disadvantage of this corporate veil theory. They said, okay, even if we do any kind of fraud, it will be the company which will be held liable and we will be protected by that. We will be covered under the shield of the corporate veil theory. So people started using, taking disadvantages and started doing fraud because company is separate from its shareholders. If any company will be considered to be doing fraud in the organization, then people will come and catch hold of the company. But then law said, whenever any fraud is being committed, we have to see who are the people behind the company. In order to cut upon the frauds and take an action against the shareholders, the lifting of corporate veil has been introduced. It says we have to go to the realities behind the legal facade. So you cannot say that company cannot do on its own. Company is directly linked with its members, although it is separate. The corporate veil is separated from its members, but sometimes this veil has to be lifted. Veil has to be lifted means you have to lift the corporate veil in order to understand. You can see this veil, a curtain is existing between the shareholders and company. So company has its own identity. Shareholders are not liable for the acts of the company. This is what we understood in Salomon versus Salomon and Company Limited. But can this veil be lifted? Means when we lift this curtain, the shareholders and company are treated as one. So these are the few cases. This is the separate legal. Now this is very important. If examiner gives you a question, what is the concept of separate legal entity? Then this is how you have to explain it. Corporate veils reference can be given. The shareholders are protected from the liabilities of the company's action, and if they contravenes, corporate veil concept applies. And the same has been laid down in the Salomon versus Salomon and Company Limited. Those who are asking, ma'am, we have to learn the case law as it is. It is important to understand the case law. You will not be required to write the case law as it is, but yes, you should have an understanding, a strong understanding, so that you can give a reference of this case law wherever corporate veil theory questions are asked. Now let us discuss, there are 5 cases where this corporate veil will be lifted and the shareholders and company will be treated as one. Number 1 is to determine the character of the company. For example, trading with the enemy. So in Indian Contract Act also you must have read, children, that we cannot enter into contract with the enemy country. That means if 2 countries, England and Germany, if they're having a world war kind of situation, then the people of these countries cannot enter into a contract. So any countries which are having any enemy kind of relationship, then you cannot have a contract between them. I hope, students, I am audible to all of you. Sir, is it audible? I hope everyone can hear me because I'm not receiving answers on the query pad also. Are we connected? All right. So to determine the character of the company means if you're trading with any enemy. So there is a very interesting case law, Daimler Company Limited versus Continental Rubber Tire, which tells you that if you are trading with the enemy, then this is not allowed. The corporate veil will be lifted. The second case is to protect the revenue. To protect the revenue means whenever you are doing any business through a company, if you have high profits, you need to pay the taxes on those profits. So if you are trying to do any such kind of things, okay, thank you so much, Abdul Vanisha, for confirming that it's clearly audible. Thank you so much. So for protecting revenue means if you are liable, if you are earning huge profits, you will be required to pay the taxes to the government. And if you're trying to do any kind of tax evasion, you're trying to hide the taxes, you're trying to do frauds with your profits so that you cannot, you don't have to pay tax to the government, then also the corporate veil can be lifted. So we call it to protect the revenue means to protect the government's revenue. There should not be any interference with the government's revenue. Then also the corporate veil needs to be lifted. So in this particular thing, we'll be doing the case law that is Dinshaw-Manigchi patent. So lifting of the corporate veil, we'll be doing this entire case studies discussion will be taken up from the study material. But how you have to learn it, the alien enemy case law references Daimler Company Limited versus Continental Tire and Rubber Company. And for protecting of the revenue, it is Dinshaw-Manigchi patent. The third case is to avoid any legal obligation. So if you're trying to avoid any labor laws, so say for example, there is a company ABC Limited and it has to pay bonus to its laborers if certain percentage of the profits is crossed. But when they cross that certain percentage, let's assume if you get a profit of 1 crore, then you have to pay 5% of the bonus to the labor class. But instead of showing that 1 crore profits, out of that, they took 50 lakhs and invested it in some another company. So that now my books will only be showing the profits of 50 lakhs. So law said if you have formed that subsidiary company just to evade the obligations, just to avoid the legal obligation, then corporate veil will be lifted and that subsidiary company and you will be treated as one. Similar was the case of formation of subsidiaries to act as your agent. If you're just transferring your money for investing in subsidiary companies who are just acting as your agent only, they're not doing any business, but you have just done the contravention of the provisions. You're just doing the circulation of money, investing it in the subsidiaries, and they're acting as your agents only. So in the Merchandise Transport Limited versus British Transport Commission, in the same case law, this was held that forming of these subsidiaries will be considered illegal and corporate veil will be lifted and you all will be treated as one. And the fifth one is very, very interesting. Any illegal activities if you're doing. So if a company is formed for specifically for doing any fraudulent activities and improper conduct. So there was a company which was formed just for doing fraud, just was cheating people. So law said that there was a director, Mr. A, and the court held him liable that Mr. A, you have formed a company and you're doing fraud with the people, you're doing cheating, you're doing illegal activities. So Mr. A said, I am a company, I am the shareholder, I am the director, Mr. A, and I have formed the company ABC Private Limited. So I have read about corporate veil theory. I am different and my company is different. So if you're thinking that my company is doing fraud, please go and get hold of my company. Why are you coming to me? So law said, listen, you are trying to act smart. If you're doing any improper conduct, if you're doing any fraud, the veil will be lifted and you and your company, Mr. A, will be considered as one and legal action can be taken against Mr. A. Similar was the case law in Guilford Motor Company versus Horn, where in case of a fraud and misconduct, the corporate veil was lifted. So I've given you a brief summary of what is corporate veil theory. Now we are going to discuss in detail about how are the cases where the law has regarded the corporate personality, disregarded it, and disregarded the concept of separate legal entity, and shareholders and members are treated as one with the company. So number one is to determine the character of the company, where you have to find whether the company is a co-enemy or a friend. So if you are doing India and Pakistan, they are not into any war kind of situation. So we can have a contract with them. India and China, we still have a contract with them. But tomorrow, if we have this kind of enemy relationship, if a world war starts and there is a war situation between two countries, then you cannot enter into a contract with each other. Do you remember restrictions in the nature of contract, restraint in trade? If you would have read about it, where it gave the reference to it in the partnership also, where we were saying that if you're a partner in a firm, then once you go and leave the firm, agreements in restraint of trade, may you have read about this. Similar, you cannot do the same business. And similarly, if you are living in a country and you are having a war with another country, then you cannot trade with both the countries. Why? Can anyone tell me why we should not have contractual relationships? Why we can't trade with the country with which we are having enemy relationships? What is the reason behind that? What is the reason behind that? What is the main reason behind the companies not allowed to trade if they are having enemy kind of relationships? Mr. Gauri, I've seen your hand raised. I'm going to give you a chance to speak. Just 1 minute. Okay, it is a void agreement. It is opposed to public policy. Yes, Vedant Gupta, you can write the reference of the case laws instead of specific details. Yes, Vedant Gupta, definitely you can give the reference of the case law. That is absolutely correct. Yes, very nice answers. They may use the funds. So if I'm having very good Vishwas sir. So if I am allowing, if there is a war between country A and B, so country A has sold certain goods to country B. Now, when the payment will be made, the same amount of funds they will be using in order to attack the another country. So that's why whenever you're having war kind of situations, you are not allowed to trade between each other. All right. Yes, Mr. Gauri, you want to speak something?
It may leads to indirectly adverse effect on the country's functioning, ma'ams.
All right. It's Miss Gauri. All right. Absolutely correct, beta. That's absolutely fine. So that means your hand raise is working. Others also, if they have any query, they want to say something, they can raise their hands. All right. Correct, Gauri. Okay. So Daimler Company Limited versus Continental Tire and Rubber Company. In this case, though, what happened was there was a company which was formed by German citizens and they formed a company in England. So they were German citizens who came together and they formed a company in England named as Daimler Company Limited. And they were having a trade relationship with Continental Tire and Rubber Company. They used to supply the tires to them and used to take the payment from them. So now there are two companies, Daimler Company Limited, that is also in England, Continental Tire and Rubber Company, that is also in England. But when the World War happened, the relationships between Germany and England were disturbed. They were having a World War kind of situation. So law said now German people cannot trade with England. So that's why they said that this Daimler Company Limited is made up of German citizens only. So it is a Germany company. So the Germans said, no, it's a Daimler Company Limited. We have opened up the company in England. It is an England-based company. So law had to lift the corporate veil to find the reality behind that. They said, you are German citizens. You have formed this company. So this will be treated as the German company shareholders, Germany people, and the company will be treated as one. So that's why corporate veil was lifted and they were not allowed to trade with each other because they were having enemy kind of relationship. It says the court may examine the character of the persons who are really at the hem of affairs of the company, means who are actually managing the affairs of the company. That needs to be seen. So unlike a natural person, company does not have its mind. They cannot be a friend or enemy. So how we decide the enemy company? It is decided by the control of the people who are having in their hands. So if we are having enemy relationship with different countries, then both countries cannot have trading relationship with each other. Everyone is clear about Daimler Company Limited versus Continental Rubber Tire. All right. So second is the case law to protect the revenue or taxes. It says if you are trying to evade the taxes, Juglilal versus Commissioner of Income Tax, the same case law was held where he was trying to evade the taxes, he was trying to avoid the taxes, corporate bail was lifted. Another very interesting case law, which is examiner's favorite and many a times interchangeably, either in the mock test paper or RTPs or suggested answers, you will definitely find the reference of Dinshaw Manekji patent. So this is one case. These are the name of case laws which I would want all CA foundations to learn the name of case laws. You're writing, ma'am, do we have to remember the case laws? No, you don't have to remember whole history, geography of the case law. You don't have to write over there, but the name of the case law for reference is very, very important. So there were only few case laws that you have done in Indian Contract Act. Sale of goods hardly had any case law. Partnership, you have just done 2-3 case laws, KD Kamath and Santi Ranjan Das Gupta. LLP, you did not have any case law. Negotiable instrument does not have any case law. Only the case laws are in the Contract Act and Companies Act. So Contract Act case laws also you have to remember whatever case laws you have studied over there, and whatever case laws I'm discussing with you in Companies Act have to be remembered. Okay, so in CA Foundation, case laws is very, very important. You might to write exact case laws everywhere, but yes, it always gives you a good impression to the examiner if you're mentioning such case laws as and when it is required only. So if you get something related to corporate veil theory, definitely write about Salomon versus Salomon and Company Limited the way I showed you in the presentation. And if you get something related to this Dinshaw Manekji patent, now what is this case law trying to tell you? First, we'll understand the case law, then we'll, in the next lecture, I will explain you about how to use their reference. It says company, where the company was not a genuine company and merely the assessee himself disguised under the legal entity. So there was an assessee. Assessee means under the income tax authority. When we use the word, when you have to pay an income tax, the terminology given to an individual is the word which is used as an assessee. Assessee means an individual who had to pay the taxes. So this assessee was having huge income by way of dividends and interest. So what was Dinshaw doing? He has invested lots and lots of money in bank accounts and also in the shares of the company. So he was getting huge dividends and interest income. Now, when he got huge dividend and interest income, he got really worried, because when we have high incomes, we have to pay high income tax. So he opened up 4 different companies. What did he thought? He said, let me open up the companies, and he transferred all the money of his dividend and trust in those companies, and in return took a loan from those companies. So when income tax officers went, they saw that there is just an entry made in the 4 different companies, and there is another entry of reversal which is shown as a loan. So they said, Mr. Dinshaw Manekji, you are just trying to avoid your taxes. And instead of that, you have invested the money in these 4 private companies that they are not doing any business. So Dinshaw said, okay, that's not my problem. Company is different. Shareholders are different. Please go and get hold of my 4 private companies, because company have their own corporate insulation. Why should I be caught? My companies should be caught. So law said, don't try to act smart. You are the person behind all these things that you're doing. Therefore, the corporate veil was lifted, and those 4 private companies and Mr. Dinshaw were treated as one, and action was taken against the real owner of the income. So who was the real owner of the income? Dinshaw was the real owner. He was having huge income by way of interest and dividend. He invested that income in 4 different companies and took the income same way by way of loan. So it was just a circulation of money that he was doing in order to avoid the income taxes. That's why corporate veil was lifted, and he was held liable for these kind of things. Is that clear, children? Any doubts still here? So we have done 3 important case laws related to your corporate veil theory. One is Salomon versus Salomon and Company Limited. Another is Daimler Company Limited, where you have understood about England and Germany company. You cannot have the relationships because there is a World War kind of situation. Then we have discussed about the Dinshaw Manekji patent, where you are trying to avoid the income taxes. Court will lift the corporate veil and you will be held liable. Yes, Mr. Vedant Gupta, that's correct. So if you have that kind of incomes and you're a powerful businessman, but you're not supposed to evade the taxes. Okay, any doubts still here, children? Anyone wants to ask anything? Yes, Mr. Ankit Singh.
हेलो मैम।
हेलो बेटा।
मैम जो ये डिंसो मानक जी पैकेट में एक बार फिर से आप एक्सप्लेन कर सकते हो क्या? आई डिडंट अंडरस्टैंड इट।
You want me to explain it to you in Hindi?
No, ma'am.
Okay, good.
Yeah.
So what happened in this case law was, child, that this Mr. Dinshaw, he was getting a lot of income. Income means that he was earning. What was his earnings? He has invested money in different shares. When you invest money in shares, what do you get in return? Dividends. When you have savings in your bank accounts, then what do you get? Interest. So he was getting income by the way of dividends and interest. Now let's assume he got the income of 1 crore rupees. So on this 1 crore, he had to pay taxes under the income from other sources. So he did not want to pay income tax. He tried to hide his income. Now, how he tried to hide his income? He invested this 1 crore rupees, 25 lakh, 25 lakh, 25 lakh, 25 lakh in 4 different private companies, and in return took a loan from those companies. So actually, I have my income. I should have paid income tax on it. But instead of paying taxes, I'm putting it in as an investment in another company, and the same amount I'm taking as a loan. So it is my money only which I have given to them, and my money only I have taken as a loan. So court said you are just doing a circulation of money just to avoid the taxes. So that's why corporate veil was lifted, and these 4 private companies and Dinshaw, they were treated as one, and action was taken against Mr. Dinshaw. He had to pay the income tax on whatever income he is earning. All right, is it clear, Ankit? Okay. So next case is to avoid legal obligation. So where the sole purpose of forming the company is to reduce the amount of profits to be paid to the workers. So I give you a very interesting example. If I had a profit of 1 crore, and if it is written in my act that I have to pay this much bonus, and instead of showing those profits, I just try to hide the profits. How am I hiding the profits? I have invested those profits into some different company, creating a subsidiary company. So in workmen employed in Association Rubber Industries Bhavnagar versus Associated Rubber Industries. So the workers who were employed in this company have taken an action against the Associated Rubber Industries Bhavnagar, saying that we have not been given the bonus where we were supposed to get the bonus, but the company has invested the money so that the profits go down and they cannot give us the bonus. So what were the facts of the case? A Limited purchased the shares of B Limited by investing a sum of 4,50,000. So A is buying the shares of B. So A invested the money in B Limited, 4,50,000. And dividend was shown in the profit and loss account year after year. This dividend was used for calculating the bonus payment. Sometime in 1968, the company transferred the shares of B to C, a subsidiary wholly owned by it. Dividend did not find the place in profit and loss, with the result of surplus available got reduced. Now, what is happening is in this aspect, you just simply understand that there was a profit amount which is coming in my books of accounts. And now when that dividend and profits have come, I was supposed to pay bonus to the workers. Now, this dividend which is appearing in my books, I try to reduce this amount so that the amount will get less. I will not pay the bonus. And where did I invest this amount? I invested this amount in subsidiary C Limited. I have just shifted the money to another company so that my bonus is avoided. I don't show my profit. So the company created a subsidiary and transferring its investment just to reduce its liability to pay a bonus to the workers. So if a case study comes to you that there is a company which has been creating a subsidiary company just to reduce its liability to pay a bonus, then Supreme Court lifted this corporate veil. He said the separate existence of subsidiary company will not be considered. New company has been formed except those transferred by the prisoner, but no business income has been done. He said you're not doing any business, you're not doing earning any profits, you're just trying to avoid the legal obligation, that is of paying the bonus. That's why you have reduced your dividends and profits. This is not allowed, and court lifted the corporate veil, and that subsidiary company and this owners were treated as one, and corporate veil was lifted. It says you're serving no purpose, just to reduce the gross profits, to reduce the amount paid as bonus to workers. That's why in this Associated Rubber Industry Limited versus Associated Rubber Industry case, it was held that corporate veil shall be lifted and the workers shall be given the dividend bonus which was to be paid to them on the basis of that dividends that the company has earned. Any doubt still here, children? So we have done 3 important case laws related to lifting of corporate veil. 2 important case laws are still left with us along with your MCQ based questions. So just go through it. We'll take a small break of 5 minutes over here, and then we'll wind up the syllabus for today. All right, children, you have read the case laws and I could not see any queries so far. So let's move to your testing your knowledge and then we will complete the balance 2 points of corporate bail theory. So a company is different from its shareholders. Is it true or is it false? You all can answer me back on the query pad. Test your knowledge. Question number 1. A company is a person different from its shareholders. So is it a person who is different from shareholders? Okay, Abdul has sent a query. I will just answer you. Vedant Gupta is asking how come they showed dividend in P. So what are you trying to ask, Vedant Gupta? You can ask your question clearly. It's not clear. Devansh Bhatti, Vanisha, Vishwas, Vedant Gupta, all of your correct answer has been given. True, ma'am, a person is different from its shareholders. Just read the second question. A company ABC Limited has 5 directors. All the directors met with an accident and died. Will ABC Limited come to an end? Yes, the company will come to an end. Or the company continues to exist as it has a perpetual succession. So question number 2, A or B, what is the correct option? Meanwhile, I'm reading the doubt raised by Mr. Abdul. Ma'am, if it is not mentioned in MOA that bonus will be given, then company will still be liable. So Mr. Abdul, the legal obligation which is created depends upon whether it is under the provisions of the Act or what is written in the Workmen's Compensation Act. So there are different Factories Act also applicable to them. So what that point is trying to explain you, if there is any legal obligation, whether it is written in your MOA or it is as per the provisions of the Act, so if it was to be paid, it has to be paid. So in any way you're trying to avoid the legal obligation, you will be held liable. Okay? Vedant Gupta, they showed dividend in P. Are you talking about profit and loss account? What are you saying? Yes, correct answer given by all of you for the second one also. So they were to show their dividends, whatever incomes they are earning, that is the revenue that they are earning, Vedant. So they had to pay taxes on that. In order to, instead of booking that dividend in your books, they have tried to evade it. They have tried to invest it in some other companies. ABC Private Limited has opened up by Mr. A just to distribute the income that he has earned. So he has opened up a company just to distribute the income that he has earned by way of interest and taxes to avoid taxes. Is it advisable to lift the corporate bail? So what will you do in this company? You are the consultants, your future budding chartered accountants. You have to advise ABC Private Limited. They have opened up. This was opened up just to distribute the income by way of dividends to avoid the taxes. Yes, the bail should be lifted, or no, we should not lift the bail because the corporate company is different from its members. What will be your advice to them? Kavita has asked a question. Kavita says that the income was not in the name of the insurer, but the companies which form a different name having the income from investment, and the company have to pay tax. Yes, definitely, those companies will have to pay tax. Is it true that the income is dividend between these companies, therefore exceeds the limits of income tax? Okay. So, Kavita, you don't have to apply those income tax principles of whether the slab rates have been exceeded or not. So, definitely the slab rates were exceeding. That's why the income tax was to be paid. Now, what you have to study over there in Dinshaw managed patent cases, that instead of paying my taxes, I'm just giving my income. This is the same case law, question number 3 in front of you. All right. So all of you have given the correct answer. Yes, ma'am, the corporate bail will be lifted. Now, what Dinshaw did, that Dinshaw said, okay, I'm not trying to avoid the taxes. I have opened up companies. You just go and get hold of them. Company is different. I am different. My company has did something wrong. Why I should be held responsible? So it was held that you are the person who is doing all this distribution of profits into your investments and you're trying to avoid the taxes. So whatever income you are, and then he has also taken up a loan also, right? So he was not paying any taxes on the income. He was just trying to circulate his money. That's why legal action was taken against him. So you don't have to go into much details whether the slab rates were exceeding, what was the income tax rate at that time. You simply have to understand if you're trying to avoid the taxes, you're creating a company to avoid your legal obligation. You're creating a company to avoid your taxes, or you're entering into contract with alien enemies. The corporate veil shall be lifted. Okay, and yes, Vedant Gupta, you have written it now rightly, appropriation of profits. So that is, I hope you have understood now. Okay. Yes, Miss Gauri wants to ask something. Speak, beta.
Ma'am, how will you find out he's avoiding a tax?
So that was appearing from his books. When they saw that he has created different companies and those companies were not doing any business. Actually, when you are earning income, you're supposed to pay income tax. So it might have happened that the income tax authority sent him the notice that why you have not paid the taxes. It is such a huge income appearing in your books. Why you're not paying the taxes? So that is how the whole story would have started. But what we have to remember is that anyone doing any of these kind of frauds, the corporate veil will be lifted. You cannot just put the blame on the company that company is separate, I am separate, so company ko pakad. That cannot happen. You are the person who is doing all these kind of frauds. All right?
Thank you, ma'am.
All right, beta. Because ABC, yes, Abdul, correct answer. Natasha, Divyansh, Bhatti, Vedant Gupta, all of you have given the correct answer. Kavita, I hope you have understood the point now. All right, let's move ahead. Maximum number of members under a private company can be 50, 150, 200. So this we have not done public and private companies, so you can leave it right now. Minimum number of members we have discussed today. So what is the minimum number of members in private company and a public company? What is the minimum number of members? So question number 5, you have to answer. What is the minimum number of members if you're starting a private company and a public company are? So the correct answer is question number 5B is the correct answer. 2 in case of private limited and 7 in case of public limited respectively means in both the cases. So private company it is 2 and 7 in case of public company. I hope everyone have answered this correctly. Now let's move to the last 2 cases of corporate veil theory from the study material. So again, the 4th one is very much similar to the 3rd one. 3rd one, you're trying to avoid the legal obligation. 4th is also you're just creating a subsidiary company to act as your agent or a trustee. So company may sometimes be regarded as an agent or trustee of another company and may deem to have lost its individuality. Hence, the principal company will be held liable in such a case. So if you have just invested your money just to form a subsidiary company, which is acting as your agent only just on your behalf, then that company will lose its individuality. A transport company wanted to obtain license for its vehicles but could not do so if applied in its own name. So there was a transport company, they wanted to take up a license that they cannot apply in its own name. Therefore, they have formed a subsidiary company just for the application of license in the name of subsidiary company. Vehicles were to be transferred to the subsidiary company. So the parent and subsidiary were treated as one commercial unit and applications were rejected. So means you were supposed not to go and now you're sending your son for the same thing. So it says both of you are banned. So holding and subsidiary, you might be facing some problem because we have not yet done the definitions of holding and subsidiary. What is the meaning of holding and subsidiary? Subsidiary means if you're investing more than 50% of the share capital in another company, then it becomes your subsidiary company. So in the next class, when we will be doing types of companies, there you will get a clear picture of what is a subsidiary company. As of now, हमने क्या समझना है? एक parent company होती है, एक subsidiary. So if you as a parent, you were rejected, you send your son for the application. So both of you got rejected. So here you're not sending, this is a parent company. It has created a subsidiary just for the applying of the license. They said, मुझे नहीं license मिल रहा, subsidiary बना देता हूँ, उसके through license ले लो. तो fraud ही कर रहे हो ना, ये नहीं कह सकते company ने fraud कर. You as an individual, you have done a fraud. Whether you're doing it as a parent company, so you're just making the subsidiaries to act as your agent, then also corporate veils will be lifted. And the last one is the most interesting, Guilford Motor Company versus Horn. Now, they have not given you the explanation for this case though, but I'm going to explain you. It says if any company is formed for illegal or improper purpose, for example, to defraud the creditors or legal obligation avoiding, then also the corporate veil is lifted. So if you're trading with your enemy, you're trying to circumvent, means you're trying to avoid the taxes, where you're making the subsidiaries to act your agents, you're avoiding the legal obligations, or where the company is adopted for any illegal activities, then also the corporate veil is lifted. Now, ma'am, what happened in Guilford Motor Company versus Horn? So, Mr. Horn was an employee of a company. He was working over there. And when he left that company, he told that company, Guilford Motor, he was working with Guilford Motor Company. So when he left the Guilford Motor Company, he told them that I will not do the same business. Remember restrictions in respect of the trade. So he promised them that I will not be doing the same kind of business within the specified local limits and within the specified area and for a certain time period. So he told the Guilford Motor Company that I will not solicit your customers. What is the meaning of soliciting your customers? Means he was already working with Guilford Motor Company. Now, when I am working with a company, I know all the trade secrets. I know how the profits have to be earned, who are all my customers and to whom I'm going to sell. So now Mr. Horn was working in that company and he said that I will not try to cheat your customers and I will not try to attract them. But what did he do? Mr. Horn formed the similar company and he already had knowledge about those trade secrets and he went to the customers and he said, now don't buy the things from Guilford Motor, buy the things from me because I have also formed a company. So he was trying to do illegal activities. This is an illegal activity. When you're promising someone, you're breaking your contract, you're doing a breach of contract, that means you're trying to cheat them. So he started attracting the customers of Guilford Motor Company. He started to solicit them. So then Guilford Motor Company filed a case against them. So when he went to the court, Mr. Horn, he said that I am not responsible. My company is doing all these things. I am different. My company is different. So law said, Mr. Horn, your company does not have eyes and ears and arms and legs. They cannot walk and go and tell the customers that please come and buy the products from us. You are the man who is the real person, owner behind the company. That is why you will be held liable. So the company that Mr. Horn has formed and Horn were treated as one. So don't think that Guilford Motor Company is the company that Horn has formed. Guilford Motor Company ne case kara tha Horn ke against. So he was working as an employee over there earlier. He cheated that company, formed up another company. He tried to solicit the customers, means he tried going and attracting the customers of this company. That's why a case was taken against him. And law said that Mr. Horn, whatever company you have formed, the corporate veil will be lifted and you and the company will be treated as one. That's why action was taken against Mr. Horn. Clear? So that is specific case of companies formed for fraud and illegal purposes. So with this, we have done in detail the definition of company. All the features of the company has been discussed in detail. Macora versus Northern Assurance Company, we have understood that you cannot even have the insurable interest in the property of the company. Company's property belongs to company and shareholders have their own property. So you cannot interfere with the property of the company also. Then we have discussed in detail about the common seal, artificial legal personality. Common seal also we have done. It is an optional. If you have opted for it, you have to give the common seal. If you don't opt for it, 2 directors shall be signing it or 1 director and 1 company secretary shall be signing the documents. Then we have discussed the whole concept of separate legal entity, Salomon versus Salomon and Company Limited, in which Supreme Court judgment it was held that Salomon is different from the company he has formed. Whatever money was given to him was given him in respect of secured creditor, not just being an owner of the company. He got the money because he was a secured creditor. Why he was a secured creditor? Because he has given debentures to the company, borrowing has been given, and it was a secured. Where it is written that against a charge on company's assets means a security has been created and given against that borrowing. And unsecured creditors were not given anything. That's why they went to the court, and whole of the case we have discussed Salomon versus Salomon and Company Limited. That company is different from its shareholders. Then we have understood the corporate veil theory. Again, the same theory, which is a separate legal entity concept. Whenever the examiner gives you a question for the corporate veil theory, you should always give on the basis of Salomon versus Salomon and Company Limited. It was decided that company is different from its shareholders. They have a separate legal entity existence. And after that, we have discussed 5 important cases and 5 important case laws also, where we have seen where the corporate veil can be lifted. Once the veil is lifted, the company and the shareholders are treated as one, and then action can be taken against those people. Number one, when you're trading with your enemy. Number two, if you're trying to defraud the creditors, any illegal activities like Ilford Wood Motor Company versus Horned. If you're trying to avoid the legal obligation, that bonus case you have to remember. If you're creating the subsidiaries to act as your agent, where we have discussed that transportation license. And another thing, that is Dinshaw Managee Pettit, which I'm going to discuss with you again as an examination question paper. Questions also have come. So that case also shall be taken up. So in there we have understood wherever you're trying to avoid your taxes, also the corporate veil will be lifted. So this is your revision also of whatever we have done. So I hope you don't have any doubts. I'm here still for 3-4 minutes more. If you have any doubts, we have also done the questions related to the same. If you have any doubts, please feel free to ask your doubts, children. You can raise your hands, you can ask your doubts. You can also send your doubts in the query pad. Okay. Vanisha has written a doubt, ma'am. If customers from Guilford Motors comes to Horn by seeing the advertisement, then so Miss Vanisha, if Horn is not trying to cheat anyone, if he is not trying to defraud the creditors, he is not soliciting the customers are coming to his business, then there is no mistake. So only if you're doing any fraud or illegal activities, then only the corporate veil will be lifted. Okay. So yes, Mr. Divyansh, you want to ask something?
Ma'am, why can a company cannot be enter into jail?
Why can the company
Cannot be jailed?
Why
जेल
the
में
company?
कंपनी क्यों नहीं जा सकती? वो
Because
आर्टिफिशियल
company,
लीगल पर्सन में है.
because company artificial legal person, and you cannot put any building in a jail. How will you put it up now? So only the men behind the company, the directors, shareholders, they are put behind the bars. That's why lifting of corporate bail has been made. Okay.
Okay, ma'am.
Okay. Yes, Ankit Singh.
Ma'am, in case we studied before that, in case of like insurance companies, electricity companies.
Mm-hmm.
My question is that what will be the overriding law? Is company according to the company, so it intervenes sometimes, which is mentioned where except the provisions of
So that the provisions of that respective act will override. So if you're an insurance company, then Companies Act is applicable to insurance company. But if insurance company is saying something different and Companies Act is saying something different, then you will follow insurance act.
Okay, ma'am.
Okay. Okay. Yes, Miss Gauri.
Ma'am, can director become a secured creditor for company?
Yes, of course. There are limits of the borrowings, section 188, 189. When you go to see a final, we'll teach you over there. So director can be a creditor when he has given any borrowings to the company.
Okay, ma'am. Thank you.
All right. All right. Thank you, all of you. And thank you, Abdul. Abdul has written it's all clear with a great revision in the end. So I hope you have enjoyed the revision also. Anyone still wants to ask anything, you can ask, children. You can raise your hands. You can ask your questions, whatever you want to get a clarification on. Otherwise, please revise whatever we have done in today's class. We'll be meeting in the next class and we'll be trying to cover up all the types of different companies. And in the next lecture, we'll see steps to incorporation. And with MOA and AOA discussion, we'll be winding off the chapter. Yes, Akshit wants to ask something.
Ma'am, when is our webinar for partnership and companies?
You'll come to know about the same soon. So that will be a whole of the revision of your chapters. We'll be doing that soon, maybe on 17th or 19th. You'll be having.
In which app, ma'am?
That you will have to check. This is an admin query. You can ask the technical support where you have to join the link. You will have to ask the admin for that.
Who is the admin, ma'am? Don't know. That's why I asked you, ma'am.
So how the way you have joined the link today, you will get to know the same way the link will be coming. Like you have joined today now, the same way the link will be coming to you. Sir, somebody at technical support can help with this question. Sir, are you there? So can you tell them how they can join the webcast link? Will they get the link at the same place? They will get the link for the webcast at the same place where they join now. Akshit, you will get the link at the same place. The way you have joined today's class, you can join that class also. All right. I hope no one has any more queries, and revise whatever we have done. See you soon in the next class. All right.